Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 UAE time on the 4th of July, which of course in the United States is Independence Day, and there's Liberation Day a few months ago. Now we've in the actual Independence Day. And will they be celebrating the big, beautiful bill that has just passed through Congress? And amongst the thousand pages, going to add $3 trillion onto the sovereign debt of the United States with its massive tax cuts, kind of the centerpiece of that bill, and many other things, including what appears to be the kind of killing of the Biden Inflation Reduction Act, which of course was all of the benefits and incentives for the US economy to transition and to invest in renewables and so forth, and so many more things, cutting of Medicaid and all of the other big social benefits that have existed in the United States for decades. Uh, Yet the equity markets love it. So it seems equity markets wins no matter what happens. The only thing they know is the next record. Brent crude oil this morning is trading a little bit down, sort of unchanged, you'd say, at 68.56, which ultimately is a little bit on the higher end of the range that it has been enjoying since the end of not the Iraq was decades ago, but the Iran-Israel conflict, having jumped $10+, it went back, but creeping back up towards 70 with all that's going on. Let's kick off this morning with Patrick Coulson, CEO of Insights Global. Patrick, maybe give us your thoughts and reaction to this big announcement overnight in the US. Should the oil markets, energy markets be concerned? Is it good news? Is it bad news? Your thoughts?
So you're referring to the big beautiful bill, right?
I unfortunately am, yeah.
Okay, yeah. So sort of my view is that, because yeah, the logical would be that the dollar would be sort of under pressure because the debt is sort of exploding, and is already a concern, and will continue to be a concern. Um, and what you normally see, if the value of the dollar decreases, then oil prices well tend to trend up due to let's say the fact that oil is denominated in US dollars.
And
For
when
the
you
rest of
think,
the world, in
yeah,
local currency, that doesn't really make a difference. But if you look at the number, the oil price in dollars per barrel, yeah, it should be sort of a supporting factor.
let's go across to the US, where it's still late night and everybody, perhaps they're still popping champagne or crying into their evening meals. Dr. Rad Al Qadiri, managing partner at 310 32 Associates. Rad, let's just start first on the politics of all of this. Is this clearly another big win for Trump?
I think it is a win for Trump. I mean, some of the margins in terms of this deal were pretty tight. But yet again, I think Trump has been able to show that he can corral, he can rally, and he can push, the Republican Party in a direction of his choosing. And, he came in intending to make this sort of part of his signature legislation, um, part of his signature policy. So you have massive spending and increased spending in terms of immigration. You have the tax cuts that sort of are extended and funded, and
Funded?
what he has basically done is fund them on the back of debt and on the back of cuts in welfare, as you mentioned. So I think, the question politically, this is going to be a win. He's certainly going to present it as a win. And coming on the 4th of July, as you mentioned, just sort of adds to that. But the impact of this in the longer term, whether this is a win for the US, how bond markets ultimately respond to it, and as how the dollar responds and what it does ultimately moving forwards for Trump politically, as this has some of what the MAGA base wants in terms of anti-immigration, but is going to come at a cost to some of the constituencies that Trump relies on. That, I think, is going to be sort of where the judgment will be told on how much of a Pyrrhic victory this is.
Let's go to Rosemary Griffin, OPEC Plus lead reporter at S&P Global Commodity Insights. Rosemary, of course, the other big news or big story that's sort of impacting the oil markets this week, as we go into the weekend of OPEC Plus meeting, the 8 countries responsible for the 2.2 million barrel a day cuts, of which, of course, they've put already back more than half of those. Your thoughts for this the announcements that to come? Can we sort of say it's pretty much bedded in that they will again announce an accelerated increase in their quotas?
I think that's the expectation, and that's what we've also been hearing from some of the delegates that we've been talking to who are going to take part in that meeting. A few things that are feeding into the decision. One is that there is a sense that once they decided to unwind the cuts, there's this idea that it makes sense to do that in the summer season when demand is higher, to mitigate the price impact. There's a few things which could play into it, though. I don't think the compliance issue has been resolved. We have seen from the early data, it looks like Iraq and Kazakhstan increased their exports last month. And also after the last meeting of the voluntary cutters, we did hear that a small splinter group had requested a pause for the July increase. So ultimately, they did manage to reach an agreement, but we could see some alternative suggestions tabled in the meeting on Sunday.
Well, just on the follow-up on that, Rosemary, we're seeing, as I said at the intro, that oil prices are rising, and this sort of putting aside the spike through the 2 weeks of the Iran-Israel conflict, they're sort of backed it down in the sort of mid 60s, but now towards the high 60s. Why is these supply increases, these quota increases, not delivering what one would think is should be a downward pressure on oil prices? Obviously, initially they did, but in recent times now we're seeing an upward trend. You are one of the secondary sources reporting to OPEC Plus. Are there actually tangible, physical extra barrels coming into the market? And if so, what percentage of these cuts are resulting in physical new barrels?
That's something we're still trying to figure out. It definitely wasn't the full 411,000 barrels a day last month. It does look like this month, or rather for June, that there may have been a bit more of an increase, primarily driven by Saudi Arabia. We saw quite a big increase in their exports last month, according to the preliminary data. So we're still sifting through all the numbers. But it does look like they are starting to increase production. I think Russia's an interesting one. The extent to which they can increase production is debatable. And obviously after they called for that pause for the July increases, is that a sign that perhaps they will continue to be under quota?
Patrick, it's that extra supply that is coming from OPEC Plus, if indeed whatever amount of net barrels it is, are we seeing that is it migrating into inventories, or is it being consumed? Is there anything, insights you could share from the point of view of where global stocks are?
Yeah, so if you look, so we do the research for the ARA and the European stock levels. If you look at those numbers, you see a constant, let's say, from the beginning of the year to now, a declining trend in stock levels. And so from that point of view, and we're talking about oil product stocks.
Is that seasonally normal or seasonally abnormal?
Yeah, I think it just shows that there is sort of a supply, a limiting supply factor. So apparently, the demand is more than supply. So it's not really seasonal. It's just an indication that in Europe,
So there's
So,
appetite for these extra OPEC barrels ultimately.
yeah, correct.
The
Yeah.
even in a market like Europe, where ultimately it's not a growing oil products market, would you expect to see inventories build? I mean, I know that in Europe, there's been a big focus on building gas inventory or gas stocks going into the winter, building them through the summer. Is there similar kind of commitment or sort of oil security supply concerns for oil as there is for gas? And does that result in higher inventory buying?
Yeah, so definitely after let's say the invasion of Russia in the Ukraine, that sparked a lot of concern about especially diesel inventories and diesel supply because Russia was the main supplier of that product to Europe. So as a result, the national, let's say, stock keeping organizations that manage the strategic reserves actually increased their diesel inventory levels considerably. But that was some time ago, let's say 1.5 years ago. And back then you saw a big increase in the stock levels. And as far as I know, they're still at that level. So there are strategic stocks. They have been increased to cope with the new sort of risk profile.
Rad, of course, the other, there's no rest for the wicked in the land of Trump. One big mountain climbed, and now there's another one right immediately before us, and that is the tariff, the expiry of the suspended period of the reciprocal tariffs, where the US were unilaterally imposing a significant high level of tariffs on all the countries that want to sell products into the United States. There was some announcement yesterday that they had done a deal with Vietnam at 20%, which seems rather chunky, that the 20% tariff Vietnam will have to pay to sell products into the US. Your thoughts on the outlook for this in the coming week, on which apparently the Trump administration is going to unveil what its tariff is unilaterally onto most countries because they won't be negotiated. How big a deal do you think this will be for the energy oil markets?
Like, I think the sort of Trump's signature is unpredictability. I think that may be the nice way of putting it. And therefore, as we sort of go into this week, what exactly is going to happen on the July 9th deadline is still open to question. I mean, quite clearly, the sort of notion that you'd get the 90 trade deals in 90 days that was supposed to follow, as you mentioned, Liberation Day, isn't going to come to pass. And largely because trade deals take a long time to negotiate. And this administration has limited capacity in terms of its ability to sort of manage complex problems. So I think what you're going to get sort of running through this is, again, unpredictability, uncertainty, and even some of the deals that have been announced or are talked about as being relatively imminent are deals that are deals in principle, where the sort of some of the key elements are still yet to be worked out. So I think as you move forwards, what we're going to see, I think, is two things that will weigh on the market. The first one is this element of unpredictability, this element that you could see uncertainty and events that are unanticipated sort of cropping up that's going to have an impact on the market, and fundamentally what the drag is going to be on demand and on the global economy in the longer term. I mean, you make a very good point in terms of the chunkiness at a sort of best case scenarios. At this moment in time, one would assume that the Trump administration is going to go ahead with blanket 10% tariffs as a minimum. And that is a significant increase for the United States. It's going to be a significant drag on the global economy. You're beginning to see some of the soft numbers, at least, point to some of the economic impact in the United States. But in terms of supply chains, and again, in terms of cost, that's probably going to be additive. And therefore, you would expect to see some sort of hit on demand as we move forward. Now, again, it's unpredictable, it's uncertain, and this administration can turn on a dime, or at least the president can. But I think that 10% tariffs is one to watch. And in the midst of all of the noise and all of the churn, it's that 10% tariff and potentially above that eventually markets are going to have to deal with.
Rosemary, on that point of uncertainty, whatever the announced tariffs will be for countries, and as we said, Vietnam seems have a 20% ticket, and the minimum 10%, as Grad said, it would appear for every country. But regardless, the fact the uncertainty will be over, because whatever the number that the tariff is on every country will be announced in the coming week. Does that uncertainty, do you think, lead to oil prices then to go higher because the uncertainty is now over, however damaging the number is on the tariffs? Is the market pricing that in at the moment, or the opposite? Does it drop off? Your thoughts on the uncertainty passing and its impact on the direction of the oil markets?
Well, I think the tariffs part of the is only one part of the situation, right? And I think that risk premium from the conflict in the Middle East, also potentially we could see the Russia-Ukraine conflict start to have more of an impact again. That's something that's been put to the background, obviously with all the dramatic events in the Middle East. So I think it's not just uncertainty, it's uncertainty about which uncertainty is having the biggest impact on the market. And that's obviously the issue that's been facing OPEC Plus when they're taking these decisions. I mean, I think that's a big part of the reason why they switched to these monthly meetings. But obviously, the biggest part of their flexibility has been in this group of 8 voluntary cutters. And if our analysts are predicting that they will have fully unwound those cuts, by October. So they will lose that month-to-month flexibility. So what that means for their policy, will be an interesting question.
On that unwinding, I mean, an announcement coming this weekend, as you say, there's uncertainty in a lot of places, not just the tariffs, but the uncertainty of are there producers within those 8, are they all able to increase production?
I think that's very, very questionable. I mean, we mentioned Russia previously. Obviously, you have some within the group who have been consistently overproducing. So, it's potentially more about the balance within the group rather than whether everybody increases incrementally as planned. There's certainly a lot of spare capacity in Saudi Arabia, Kuwait, the UAE. But yeah, it's definitely something that we're watching. Certainly in the first 2 months, they didn't increase as much as planned. So whether we will see that start to come into force will be an interesting one.
Let's go to the survey question this morning, which is sort of tackling the question of removal of uncertainty. Oil prices will rise after uncertainty of tariff announcement passes. That it will be a sort of liberation from that rather large global economic. And if the tariffs are, I suppose, much more punitive in the 20+% category, you'd say, well, maybe that would be a oil price falling because, as Rad mentioned, the demand would be impacted quite significantly because economic growth would be impacted by very high tariffs. Or the opposite, if it's only 10% across the board, well, maybe that's like, oh, we can handle that. We've already priced that in. Let's go on a oil price rally. China's in good shape. It can survive. So ultimately, the question is, do you agree with this statement? Oil prices will rise after uncertainty of tariff announcements pass. That removing that uncertainty will be a greater impetus to oil markets rather than the damage to global demand. I mean, that's essentially the narrative there. Patrick, I wanted to get your thoughts on the crack spread and refinery issues in Europe. The crack spread can tell us sometimes things much more clearer about demand and opportunity than the front month on the crude oil price. What are we seeing in crack spreads?
Yeah, so if you look at diesel crack spreads, they're actually widening at the moment, due to sort of supply concerns in Europe on that fuel. So recently, the Prax refinery, yeah, is getting into trouble financially. You know, probably they're going to stop operations sooner or later. And you know, that's causing additional supply concerns. They will need to import their products. The net import balance for the UK will probably rise, and yeah, on the short term, that will cause some troubles and decreasing stocks probably.
And Patrick, on the point of the tariffs, obviously the EU is the one of the biggest trading blocs in the world and one of the biggest trading partners to the United States. This tariff issue, which of course has to be negotiated on an EU basis of all countries in the one negotiation, is this proving it to be a potential crisis for Europe? Is the Europe handling it? What's the expectation there for it to be disruptive to Europe, which is already on a relatively weak economic outlook?
Yeah, so it's sort of adding again to another, let's say, yeah, additional negative economic point, right? So, you know, we're hoping obviously to have a good deal, but yeah, nobody knows what's going to happen. You know, might be 10%, might be 20, 30. Who knows? And what is good? Sometimes, yeah, Mr. Trump might say, "Okay, this is a good deal," but in reality, it's always more higher tariffs than you know in previous yeah, periods. So yeah, in any case, it's negative, I think.
Rad, looking out the sort of second half for the US beyond the tariffs and that sort of uncertainty being removed, it is July 4th. We go into the, you know, whatever, obviously Trump has the ability to make noise a lot of time, but essentially you go into the summer break, the politics doesn't really move forward. All of these politicians were incentivized to get this bill done because they wanted to get home for the holiday weekend, etc. The outlook for the US economy still looks relatively good. The jobs numbers that came out yesterday. So, despite 6 months of absolute Trump turbulence, the US economy seems to be continuing on a relatively positive trajectory. Your thoughts of that for the second half of the year, that despite all the noise, the stock market's at records every day, the job numbers look good, inflation, while still elevated, is under control. What's the outlook of that? Are we still to see the bleeding in of the Trump turbulence to the economic street, the main street? Your thoughts on a macro level to the second half?
Like, I think it goes back to sort of one of the core questions. I'm not sure I agree that the uncertainty is removed, certainly in terms of tariffs. And, you know, Congress may go and take its break, but the politics certainly isn't going to take a break as long as you have Donald Trump in the White House. And, you know, you have domestic politics in the US and what this administration is seeking to do there, and some key issues, immigration being one. But
It is
also
worth just noting again,
the
as you said
notion
in
of a
your,
the
I was just
notion
saying
of
in
an
your earlier comment, you noted that the security, the budget for the immigration army in the U.S., the ICE as it's called, was increased in this bill. I think was it 1,000-fold?
Yeah, no, it was increased. Yes, absolutely. So you've got a massive increase, but I think so. You have two elements here that go back to your question. One is the uncertainty doesn't get removed. These tariffs are still going to be in play. I think the second thing is that Trump in the White House means that you're going to have politics played out every day and played out very vocally. So I think the market is somewhat sanguine. I mean, the market still, in some ways, is having its taco moment. You know, Trump always chickens out. I'm not sure that that is necessarily a wise rule of thumb, as Trump has shown a willingness to push through on some key issues. So I think for the US, and the second thing for the US economy is, as you mentioned, this bleeds in. Some of the soft numbers are open to question. As you mentioned, the job numbers are relatively strong, but you are also seeing signs of that drag, signs of the increase in impact of tariffs. It's playing out mostly on corporate earnings at the moment, but that is likely to start to feed into prices. So I think over the course of the year, the combination of, the continued higher tariffs baseline and probably some higher still, there's going to be no let up in US-China tension, and an administration, as I say, that can throw curveballs at a regular basis, and indeed seem to sort of relish a president that relishes those curveballs, means that there is uncertainty, short term and medium term, for the US economy, and what the Fed is or isn't debating in terms of rates, I think, is a sign certainly that there is still some concern about how much of a drag tariffs will be and how inflationary tariffs will be moving forwards.
Rosemary, the other big event to happen next week, I mean, we have, as we mentioned, the OPEC, the 8 countries in OPEC are meeting on Sunday, July 6th, I believe is the date. But next week, OPEC as a group, the annual or every 2 years, their international seminar is held in Vienna. That's on the 8th and 9th of July, so that's next week. It'll be the first time that they've actually met in person for quite a long time. I'm trying to remember the last time there was actually an in-person meeting of all of the OPEC members and all of the associated stakeholders. Your expectations for that meeting, does OPEC and OPEC Plus go into that first in-person meeting with everybody happy? It's a celebration, or is it stress? What do you think the sort of overarching tone for OPEC Plus having first? Because a lot of the noise in recent months, including in your reporting by you guys, that the reason these cuts were being unraveled was because so many countries were violating their quotas. That doesn't seem harmonious. Your expectation for that in the first face-to-face meeting next week?
So I think there's 2 things that we're following. One is the OPEC Plus ministers meetings. So we haven't heard that there will be a big group-wide meeting during the seminar. It's also unclear who actually will attend.
On the plus side.
On the plus side, yeah. Will Russia send a delegation, for example? The other thing is that it's really a big opportunity for them to talk to producers beyond the group. So I'm very interested to see who you see coming from some of those members of OPEC Plus who don't have quotas. Will we see Mexico? Will we see Brazil, which signed up to that Charter of Cooperation? Will we see them taking part in a major way? Is Guyana going to show up? I know that there have been talks in the past. OPEC is always kind of interested to see is there potential to change the makeup of the group. But the other thing I think that's always interesting about the seminar is the discussions with the IOCs, with American representatives. This is quite a different environment to the last time they had a seminar, in the sense that the Trump administration is perhaps a bit more fossil fuels friendly. And there has obviously been increased dialogue with countries like Saudi Arabia and the US since Trump came into power. And, we have seen a lot more movement on energy discussions between the new administration and Saudi Arabia. So I think that's going to be a really interesting thing to watch.
Yeah, I think it's certainly the IOCs, ExxonMobil, Chevron, and all of the other big American IOCs, and it will be good to get some reporting out that sort of tackles this ultimate question of supply from their side, because the general narrative there is that they are sort of capping growth of production in the US, and these prices that maybe we're starting to see some new production, maybe investment in CapEx into the Gulf NOCs might start to dampen down a bit. So that will be an interesting narrative. Of course, as you say, there will be some maybe exciting bilateral or individual stories. Iran, the delegation from Iran will be there, of course, and their outlook in just of itself, rare opportunities to ask questions to all of these officials and executives in the corridors of the OPEC seminar, which it gives access to journalists journalist that they don't usually have. So hopefully you guys are all sharpening your pencils and are going to deliver us all some useful insights. So best of luck with that, Rosemary. Thank you again, Rosemary, for participating not only today but throughout this season. This is next week will be our last week of the season, and really grateful Patrick Coulson as well, and Dr. Rad Al Qadiri, no one better in the business than that. Thank you so much, Rad, for all of your time this season, and look forward to you all coming back in September 1st when we restart, but also to our forum in October in Fujairah, where we like to all ourselves bring everybody together once a year. So oil prices will rise, disagree and overwhelming. Get the hell out of here, Sean. That's nonsense. I'm with Rad Al Qadiri on this one. Uncertainty will ride through the summer. No going to the beach for you then, Rad. All the best, guys. Take care.
Take care. Thank you.
Thank you. Bye-bye.